Hi friends, this is Kishore. Welcome back to my channel. Nowadays, I'm hearing a lot of narrations like it is a good time to buy a home or it is not a good time to buy a home. After hearing all these things, I thought of finding a pattern, how the real estate cycle works, and finally found two of them. Today, I'm going to talk about those two cycles in this show. Hope you like this video. This is not a financial advice. This is just for an entertainment purpose only. Let's begin the show. So these are the two charts. One is called decade cycle, and the other one is called the 18-year real estate clock. There is a saying from Mark Twain saying that history does not repeat itself, but it does rhyme. So I want to check how what happened in the history when there is a real estate crash happened, and did read some books and finally found this one the decade cycle and the other one is the 18-year real estate clock. First, I'm going to talk about the decade cycle. This is also called investment cycle or a credit cycle. So it has 12 stages, 1 to 12. Top of the cycle is called the boom, and bottom of the cycle is called the bust. From boom to bust, there are 6 stages, and from the bust to boom, there are 12 stages. So it though it has 12 stages, the period it says like 8 to 11 years, and this decade cycle is published in 1937 in London Economic Standards. So I'm going through from 1 to 6, and for each stage, I'm going to show one chart, how it looks like, and whether it is what kind of signal it is giving. So first one is rising interest rates. So this is a chart of 30-year fixed mortgage range chart. So if you see here from 2020 to 2022, the interest rates went down and the real estate boom like anything. And from 2022 mid till today, it is rising. Recently, it came down a little bit, but it is still in the rising phase, rising interest rates phase. So during interest rates rise and when the home prices are high, the home sales may not be that would be appreciate. This is the second chart of second stage falling share prices. So when I see this one, it is an S&P index. It fall from all-time high to current today. It's almost 15% down. It's not a big down, but we do not know whether it is from here it will go up or still it will go down. And the third stage is falling commodity prices. I took copper and lumber on this one. Copper is called Dr. Copper. It gives how the economy is doing, because copper is widely used in home building and also electronics and in so many other products. So that's the reason copper gives good line of sight, like whether it is how the economy is doing. And lumber, this is the main thing for the home construction. So if there is no demand for the home construction, then there is no demand for lumber. So both copper and lumber is all time almost 50 low, and copper is going in sideways. We do not see anything going up or it's not going down. It's not right now neutral. The fourth one is falling overseas reserves. This is a chart from Fed. It tells like what the how the reserves are for in the United States, except excluding gold. It is from 2022. It is going down. So the fifth one is tighter money policies. So during COVID time, the Fed decreased the interest rates and banking lending reduces the lending rules. So now in 2022, the lending banks lending policies and the Fed also raised interest rates. So the money tightening of money is going on right now. So if you see this chart, so it's from 2022, it's still going up. And the sixth chart, falling real estate values. So this is an S&P Case-Shiller US National Home Price Index. This tells how the overall the nation, how the home prices are doing. If you see it from 2020, it's like went like crazy. From the 2020, it's going down. So after looking from stage 1 to stage 6, all are going down and there is no sign of recovery or there is no sign of they're going up. So right now, I believe, or my opinion is we are in the stage 6 and we do not see anything in the left hand side from the burst to the boom. So still we are in a process or in the process of real estate bottoming. Let's see what the other cycle is telling to us. This is an 18-year real estate clock. The clock is, it is a 24-hour clock. It is a uh, uh, it is divided into stages from 1 to 16 stages, up to from 1 to 16. 14 years is considered as a market up, real estate market up. 14 years. From 17 to 24 is considered as a uh, down market, and it's up to 4 years. So 14 years of up market and 4 years of down market together is called 18 years. So I'm going to show a couple of charts for each, or sometimes combined together stages. And these stages not necessarily to happen in sequence. They may happen together, and sometimes one may happen before and the other happen later. So let's see. The first one is, so this is a rental real estate activity, rental vacancy rate. It tells how fast a rental home is occupying. Right now, if you see, it is occupying pretty fast, but last couple of months, it's in the sidelines. If it is going down, means the rental homes are upping pretty fast. If it is up, means they are not going fast. So when it is going down, investors are very much buy homes and give for rental, because the demand and the real estate investors make money out of it. So from 1 to 4, I see this is the one chart gives a good insight. Right now it is going sidelines. So investors may not be that much attracted towards the investment of the real estate. And this chart talks about more profitable to build and rapid expansion in new construction, increased building activity, absorbed vacant land. So this is a chart of new residential constructions. If you see from COVID lows March 2020 to March 2022, new permits and starting of new constructions increased a lot. And from 2022 March to till date, they're going down, which means the new constructions are going down. Which means this is not a good sign or a bad sign, because if the new construction is going down, means one thing we can understand, there is no demand, and the other thing is the supply will go down. No demand means it's a down market. Supply less means it helps the current what are the existing homes, or what are the homes right now for sale, they'll have more demand. And this chart talks about easy credit and expansion of banks. This is if you see, the red line is the federal funds. In 2020, it went almost zero, and net percent of domestic banks standards, tightening standards for the commercial and industrial loans for both large and small. They eased it, so they gave loans for even low credit score, that kind of thing. This is talks about, very interestingly, this one is like during the peak of real estate, the world tallest buildings are constructed. In 2010, there are almost five or six tallest buildings are constructed, completed. This is completed in 2023, March 2023. It is in Malaysia. It is called Maril something. And this is a 15 stage 15 real estate activity different than the peak. When in a real estate, how do we know the real estate is in the peak? Means during the peak time, lot of flipping activity take place. Lot of homes flip pretty quickly. So this chart gives till 2022 the flipping activity give profit to the investors. 16 stage activity slackens but confidence remain high. So if you see this chart, it says national home purchase sentiment index. It gives how much percentage of people are uh, thinking it's good time to buy or good time to sell. 70, nearly 70% are thinking it is not good. 79% is thinking it's not a good time to buy a home now. As I said earlier, from stage 1 to stage 16, it's an upside market. From 17, it's a downside market. So in the 17, we can see foreclosures and bankruptcies increase. Yeah, this is a foreclosure bankruptcy increase activity, but I do not see much. There is an increase, but not crazy like this. This one talks about stocks enter a bear market from past all-time high. It is right now 15% down. This is an S&P index. I do not see much, but I do not see that going upside also, because forward earnings or forward P they are not good. 19. Credit creation institutions reverse policies. Recently, they started this chart. CFC recently they started the bank lending policies tightening, and also Fed funds are increasing. So the policies are reversing. So it is not a good sign for the real estate. So finally, my after looking all these things, my um, opinion on this is right now market is in between stage 16 and stage 17, which is a transition from upside market to the downside market. And what I'm looking at right now, after watching these patterns and all, I'm looking for the home for affordability index, because that tells whether the how the income of a person and family, and how the home prices and how the mortgage rates are. And rental vacancy rate, it gives, if the rental vacancy rate is going up, means there's no demand for rental. And supply in market, if a supply in market is more than 6 months, that's not a good sign for the real estate. And stock market, I'll also watch the stock market, because that bottoms first when I compare with the real estate. So these are all the things I'm watching at. Hope you like this video. If you like this video, please like, share, and subscribe, and leave your opinion on the real estate in the comment section. um, Thank you for watching. See you next time. Bye bye.